here, so Jerome Powell just went to the Congress and gave a testimony on the monetary policy that he's going to do in the upcoming months and perhaps going to 2024. Now, what did he exactly say? I'm going to break it down here for you in a very, very short, just a few minutes clip, and you will understand fully the impact of it. So let's take a look over here. So this is Jerome Powell's speech. Now, these are some of the key highlights that I found on his speech, and I want all of you to just listening in, and as we go, I'll give some commentary over here.
Although inflation has been moderating in recent months,
Yeah.
the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy.
Right, so he talked about bringing down inflation. It's not going to be a quick process. He says there's a long way to go. So that's a hint on how long he might be tightening the rate, right? Okay, let's take a look.
As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
Okay, so over here, why is he talking about economic data? Because he's actually indirectly saying that inflation rate is still high, because the current belief is that right now, all the inflation that we are seeing in the market right now is actually driven by higher economic activity, right? Better economy, more money in the market. So he's saying that, with that, then it's very likely the current policy, right, is going to last longer. The high interest rate is going to last longer than expected, okay?
If a totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes.
So that's a very strong statement, right? Because right now, I think the market pretty much anticipate that the Federal Reserve maybe will raise another 2 rounds of 25 basis point. But based on what he's saying here right now is that if they need to re-increase the tightening rate back to maybe 75 basis point, right, or even 50 basis point, Jerome Powell is basically saying that they are willing to do that.
Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal.
That's the goal, yeah?
To keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. Although
okay, so basically what Jerome Powell is saying is that, historically, when he look at all the data, right, he's saying that it does not make sense, okay? It does not make sense for him to slow down, to kind of reverse the tightening too quickly. In fact, historical evidence shows that if you want to really bring the inflation down, is to really hold on to high interest rate for much longer time. Now, what is the impact here? I think the impact here is that likely the market is going to react quite violently tonight. Yesterday night was already quite a strong night already. Let's see tonight how it goes. But I think in the long run, if the market were to react very violently to the downside, it will present very, very good opportunities here. Because like what I told my investment student over the last weekend during the option mastery weekend, right, is that the market over the long term is an upward trend. It's a very strong market. But of course, in between, is there volatility? Of course, there is. So as an investor, your job is not to be afraid of the volatility, but to take advantage of it, right? Take advantage of the deal. Now, but for those of you who are like me, very exposed to the stock market, and let's say you want to have some peace of mind, then I have another asset class to suggest to you is actually looking at properties, because over the last 3 years, I have been slowly adding properties into my portfolio to kind of diversify in a way, but also to stabilize the fluctuation, because property is generally a more stable asset class. It doesn't fluctuate, 5% up, 5% down on a daily basis, unlike the stock market, which not very often does. Okay, so by investing in stable assets, right, real estates, real assets, such as property, it allows me to actually become a better investor in the stock market, because I know that no matter what happens in the stock market, I still have a basket of properties that I can rely on at the end of the day. Okay, and tonight is going to be a very special event. I'm going to do an interview with one of my previous guests that came on to the show before to talk about UK landed property, and in particular, it's about this thing called social housing that is very unique to the UK. So I want to find out what's the investment opportunity here, and I also told her to show me some deals for me to consider as well. So I want to invest more right into the UK, because right now I already have apartments in the UK, but I'm thinking, can I buy landed property as well? So if you want to find out more about landed property for yourself, or just want to see me exploring it, right, and just want to be by my side watching how I do it, join us live tonight at 8 p.m. All right, the live stream is already in my YouTube channel. Okay, I will put a link down below over here. Okay, so that's all I want to share with you guys. I hope the analysis of Jerome Powell speech is useful. Currently, he's still at the Congress giving his statement, right? Any more information, I'm going to be right here to share with you guys. Okay, so that's all I have for this session. Quick one, and I'll see you guys next time. Bye-bye.